There we go. Hey everyone, great to see you. Hey James, hey Tristan. Good to see you guys. Hope you had a great day. We had a fairly interesting market today. Basically, we gapped up and then went nowhere. But that gap up was reasonably significant. In the morning, it did trade a little bit higher, almost 1%. And then we ended up at 0.47%. We can't say that's completely sideways chop. It is somewhat significant, but it's not a large amount upwards. That did kind of defy my expectation that we were going to move downwards, but then of course I wasn't expecting that necessarily today we would move downwards. So the fact that we're not that far up and actually where we closed right here at 662.26, 2 days ago we were at 660, and then the day before that we were at 660.91. So we're really not that much higher than the previous two closes previous to yesterday. So I still don't think there's a lot of firepower to the upside. I still think that we're going to pull back. At some point, we've got to pull back to that EMA 20-ish level, and not necessarily right to it, but somewhere close to it. It doesn't have to be tomorrow. It could happen because of quadruple witching. It's really triple witching now. Because we don't have equities futures anymore, so there's no such thing as quadruple witching. But in any case, that's often a good time for markets to change directions, for things to shake up a little bit. So it could happen after tomorrow, meaning Monday, really. But who knows? This particular analysis is not super precise. It's just sometime soon we would expect that to pull back to the EMA 20. Hey, Spider Monkey. What GEX does essentially look for gamma squeeze situations. There are many ways to use gamma exposure. One of them is to look for a gamma squeeze situation. A gamma squeeze is really where it isn't not always driven by the market maker, right? A gamma squeeze is basically where gamma, so if you think of delta as the speed, then we expect gamma to be the acceleration on an option. So as price moves up, if gamma is going higher and higher, then this price is going to move up faster and faster because you get acceleration on top of that price movement. And that's what you would call a gamma squeeze. So as long as gamma is shifting up very quickly, then yeah, that is a gamma squeeze. That could cause a gamma exposure squeeze at the same time, because if gamma increases, gamma exposure increases, right? But gamma exposure could increase independently of gamma due to options interest, due to price movement, due to a whole bunch of different things. So they're not always the exact same situation, but if you have a gamma squeeze, you will also have a gamma exposure squeeze. But if you have a gamma exposure squeeze, you won't always have a gamma squeeze. Okay? What's my opinion on GSAT? I can take a look at that in a moment. Hi, Bob Lane. There was a couple of questions that I received today regarding the gamma levels, especially the levels that I give in the Telegram channel, and how come we do or don't reach certain levels, and how come it seems off. But well, it didn't seem off to me, but I can understand that maybe if you're not looking at it the same way I'm looking at it, that maybe in certain instances it seems off. So we'll go over that as well, but I can take a quick look at GSAT. But before I do that, I want to look at the overall markets. We looked at SPY. It does look like, hey, we just reached another all-time high on the high, and we did close actually at an all-time high as well. So what does that all mean? Well, we need to look a little bit under the hood. We need to take a look at that RSP. That RSP is looking a little bit better than before. So RSP could catch up to SPY, but does the SPY pull back and make it even easier for the RSP to catch up? Or does it keep on doing what it's doing and the RSP really has to accelerate in order to catch up? But so far, these two things are looking pretty good. QQQ gap up to all-time high right there. QQQE also gap up to a is that, oh, to match an all-time high. Okay, so that's interesting. So QQQ finally played catch up to QQQ. So that is definitely a positive sign, but look how far it's deviated now. Now that's gone parabolic. So there does probably need to be some sort of pause over here as well. We look at the Dow Jones, very nice, steady, easy uptrend. Nothing to complain about over there. IWM, very, very strong move. We nailed the IWM gamma levels today and yesterday. I'll talk about that in a little bit when we talk about whether, or like how to interpret this data and whether or not it's been off or not. And then mags all-time high, at least the high hit an all-time high. But again, especially the mags are getting really deviated from these moving averages. There is probably going to be some need for a pullback very soon over there. And SMH gap up to all-time highs. This is very strong move right there. But again, caused a large deviation. So this is probably, it may not pull back. It could just consolidate. So that's something to keep our eye on over there as well. Okay, so far it's looking pretty good, looking pretty healthy. I mean, I don't have to be right. The market doesn't have to please me and pull back before it goes up. It could just keep on going up. But I would feel a lot better about it. I'd be far more assured about the health of the move upwards if we could get a little bit of a dip in and pull back first. So I want to see if there are any interesting sectors. And there's a couple ways that we do that now here in the post-market review. I'll just do it this way. I'll just pick one because it's a little bit faster for me this way. So right now, today, semiconductors, we saw that in that gap up, semiconductors, quantum computing, getting a lot of attention. At the same time, nuclear and uranium, power sources for that, and actually building products. That's interesting. Building products and biotech. Carrying out into the week is quantum computing and the uranium, nuclear. And then we see that in the 1 month. We see it in the 6 month. We see it in the 3 month, just not in the 2 month. So definitely a lot of attention being paid to the nuclear and uranium sectors. We've got lithium in many of them as well, just not the 6 month. Okay, we got metals in focus as well. So there were actually a lot of metals related stocks that I was looking at today. I was like, wow, all of these are starting to move. So we may want to pay attention to that metals sector as well. Okay, but since some people are asking me a lot of questions about other things, then I'll just leave it right there. I won't go into the deep analysis of that. So first one, I'll take a look at GSAT and see maybe a few at the money bear put spreads next week. For the indices, yeah, maybe. GSAT, we looked at this yesterday. We looked at GSAT and VSAT. I said both of them looked pretty good. I proposed a couple of potential good-looking trades. You can see that VSAT went pretty high at the open and then came all the way down, and technically it went through that stop level, but it did not close there. It did not close there. That's really important. Okay, so if I'm looking for a swing trade, it's got to be the close. So I'm going to evaluate these in the last half hour of the market session. So if it hits this level down here an hour into the market session, I don't care, unless it just really runs downwards. But I'm not going to care about it until the last half hour, last 10 minutes of the market session. If it looks way down here and doesn't look like it's going to recover and close back inside, then I would stop out. Otherwise, you just stop out the next morning. Okay, so that happened to me in Duke Energy. We talked about this yesterday, where we said, hey, just take the loss. Okay, and it also happened to me in VTR. There we go, VTR. Okay, so this had closed below my stop level, and today it recovered quite well. But because it closed, I follow my rules. I closed it, I stopped myself out, And now I could play the same way as Duke. I could have re-entered when it crossed back up with the MA50 and played to the EMA20. That wasn't a huge move. That wasn't really incentivized to do that. And so if this manages to close back up above the EMA20 and EMA8, and at that time the EMA8 curls back upwards, what do we talk about all the time in the post-market review? Okay, short-term reverting come on, reverting, okay, to the long term. It has to do this first. It has to bounce first. Okay, then I'll be interested in VTR again, and then I will trade it up to whatever my strategy was for entering this. Either this resistance here, I could look for a gamma pocket, I could look for a higher level, just whatever methodology I'm using to get into the trade. For this short-term reversion to the longer-term trend, usually those are longer trades. So I'm usually going to set a longer target than just an immediate high right here. That one, this trade right here, if it works out, would make up for that stop loss right there, and then some. And maybe not a lot more, but at least it would make up for it and then put me into a little bit of profit. If I target something else, using the fact that it was a short-term reverting to the long-term, and that could end up being several weeks or a couple months, then maybe I consider it. It just depends on my execution, right? How I decide I want to execute on this trade. Okay, so if we're wrong, we're wrong. If it violates, it violates. So GSAT, we did look at that yesterday. It's looking great. So we suggested entry right there. You would have been able to enter today at that level, not right at the open, but it did trade down there. So you would have been able to enter right there, and then you'd be in baby profit so far right now. So it's looking great. I like it. Yeah. And if you could have entered at that price today, maybe you can enter at that price tomorrow, because it's not that it didn't move all that much today. So tomorrow is a potential good entry as well. So GSAT's looking good. Have you seen good gamma levels in the metals sectors? I have not looked, but I can look. I can look today. So I wanted to go over, because every once in a while, people give me this comment, the gamma levels haven't been that reliable lately. And that always confuses me, because I haven't seen a week yet where it wasn't good at least 4 out of the 5 days. So we'll take a look at that together. Let me see if these are questions for the, nope, those are not questions for post-market review. So I will answer those later. Okay, so we'll go over the gamma levels that were given today. And so the first comment, like obviously IWM was spot on, right? Early on in the day, I didn't send this to you guys, I sent this to Graham and Nate. And at 245 on the IWM was the level. And yesterday on opening playbook, I gave 243 and 245 as important levels for today. And we can see that we started out way down here at 240 and it traded all the way up. The high was 245.15. And so it was perfect. And then it closed very close to it as well. When it was closer to 240, when it was at 243, basically, so I didn't even catch the meat of this move. I went in at 243 because Graham reminded me. He was like, hey, yesterday's IWM trade was great. I was like, oh, I should probably look at IWM, because I made a comment about it being between 243 and 245, like those are being the important levels for today. And by the time I looked at it, it was already at 243. So I missed all of this move, but I still traded from 243 up to not quite 245. It was like 244 and a half, something like that. And was able to catch that move on a 1DT expiration, because I decided to trade TNA, triple leveraged IWM, instead of IWM itself, and was able to capture 135% gain on that. If I held on all the way to the end of today, or I had just caught it at 245, it would have been about 185% gain. Not bad, not bad. So those levels on IWM were very good. And then the question then is, well, what about SPY, SPX? So if we look at SPY, SPX, what I shared with you guys was that, oh, look, there's still a lot of volatility this morning. Okay, that's clue number one, that I probably don't want to trade this. Okay, if there's a lot of volatility going on in it. So therefore, I warned you guys, be cautious. And you may be overpaying for options. Gamma exposure is all over the place on both SPY and SPX, although SPX was giving a somewhat clearer picture. But look at that wide range. And yeah, this is bigger than all of them, but it's not like so dominant. If I add up all these other bars together, it's going to be much larger than this one bar right here. It'd be like double or triple the size of this bar. And the same thing in the SPY. Obviously, there's several bars that are very similar to this. So if I add up all the other bars and I do it right here, then it's going to be like 5 times bigger than this bar right here. So that tells me that I can't rely on one specific level for it to actually reach that level or to pin at that level. Okay, so that's my first interpretation. That's my first data that I get from this morning's, the earliest SPY, SPX picture. And so I just expect chop all around, no particular price that is going to be stronger or be incentivized to hit than the other. And then over here, I said that it shifted to 665, but even so, these other ones are still fairly significant. If I add just these two bars together, it's already the same size. And I've got 1, 2, 3, 4, 5, 6, 7 of similar size. So it would end up maybe 3 or 4 times bigger than this bar if I added everything else up. Okay, so that tells me, yes, this is significant, but it's not so overwhelmingly dominantly significant. And I also am not going to expect it to just pin right there because it's not super dominantly significant. Okay, so what did that mean? And then basically the exact minute I sent that out, you see that 7:32? The exact minute I sent that out. Where's 7:32? That's 7:32. Okay. The exact minute I sent that out, what happened? Okay. It hit a high of 664.89. That's pretty close to 665. And then it bounced off of that level. And then it bounced. At this point in time, I no longer expect 665 to necessarily be in play, even if that gamma pocket is still there. We've already touched that gamma pocket. And in fact, by the end of the session, I'll show you. By the end of the session, the gamma was at, that's tomorrow. It was at, well, this changed, I guess, right at the close. But basically, you can see these are significant. You see it basically trapped somewhere between 662 and 663. When I saw this right before the close, it was at 2 blue bars at 662, 663 that are very similar in size to each other. And so it did end at 663. Gamma did eventually show that level, but obviously too late for us to do anything about it. No predictive power at that point. However, I wouldn't expect it to return to 665 for a couple of important reasons. The first one is the next bounce was far from it, and same with the next bounce right here. So these two are already giving me a clue that we're having difficulty getting above the 663, 664 region. Okay, so I wouldn't expect 665 anymore. And also this VWAP is very flat. So from there, I expect chop. And I expect that range to come into play. Okay, especially since we started with a range. And when we got a clear spike, it was not overwhelmingly dominant. Okay, now what's over here on IWM, that was overwhelmingly dominant, and we started right at the beginning of the day. If I take all these little bars, add them up together, I probably only get about 2/3 of this bar. Okay, if I just take these and stack them up, it will only end up probably right about here. Okay, makes sense? So it is overwhelmingly dominant at 245. That's why I expect specifically that level to get hit or very close to be hit. And maybe pin right there. Okay? The more dominant it is, the more likely that it could pin right there. So when I look at IWM, that's the major difference. So over here, we traded all the way up to 243. And then I didn't enter this early, but basically I didn't pay attention to it until over here. But if I had paid attention to it early in the day, I could have caught this entire move. Or if I had paid attention to the first time it hit 243 and saw it pull back to the VWAP and bounce from it, then I could have entered right there for an even better trade. But over here, throughout the day, that 245 never changed. It was always there. So when I entered over here, it was still at 245. And then what I also notice is that this VWAP is sloping upwards. Even if I don't give myself the benefit of the rest of the day, okay? That VWAP is sloping upwards. So I'm not going to expect it to chop at this point in time. I don't expect it to chop unless that VWAP flattens. So the SPY, it was flat. It was very flat. After it hit that peak, the VWAP became very flat. We can go back and look at that if you guys need to. Okay, hit the peak. Okay, at the time we hit the peak, yes, the VWAP is sloping upwards. But then, right there, we flattened out. Okay. And once we bounce, it remained flat. It never got its slope back. So I'm not going to expect it to return and challenge 665. Okay, that is very different than the picture we saw on IWM. Okay, IWM, even when it came back here, it just barely started to flatten out. And then when it bounced off of it, I start to get my slope back. See that? Okay, and so by the time I notice 243 again, there is this upward slope to that VWAP. Okay, that probably makes it a little bit more clear. There is a positive slope to that VWAP, and that gamma exposure at 245 never left. It never left. Okay, so we trade this up. Okay, it hits that 2 sigma level, which I told you guys often it bounces off of, which is why I was considering taking profits, even though it didn't hit all the way to 245 yet. So I took profits right around here, 244.5. Okay, like, oh, okay, we're above that 2 sigma. We're pretty close to 245. I'm just going to take my profits here. Okay, it did continue to go up a little, and then it did finally reject from that 2 sigma level. I guess I don't need to do this one bar at a time anymore, because by then we're out of that trade. Okay, so then it did reject from that level, but then it started to creep back up, and it did close very close. It did hit 245, and then it did close very close to it. Okay, so that gamma level was very good and spot on. The major difference was that after tagging the level, the VWAP is up and not flat, or actually it didn't tag the level. On the SPY, it tagged the level, came back down, VWAP became very flat, gamma picture shifting and changing. So basically it changed to that, and that gamma level was not overwhelming. It was not, even if I add up all the other bars, it's still bigger than that. Right? If I added up all the other bars, it was like 3, 4, 5 times bigger than the bar. And with IWM, even if I add up all the other bars, it was only like 2/3 of that one bar. So it was overwhelmingly dominant. And after a pullback to the VWAP, then that slope was still up. And so that gives me the confidence that there's still a good chance that it could tag that gamma level or get very close to it. Like this, I would have been happy with this right here, 244.8 or whatever. That's close enough for me. It doesn't have to hit exactly 245. Okay. So then the comment that, oh, it hasn't been that great lately. Well, I showed you today how to play that. Yesterday, I said, don't even try because of the volatility in the markets from FOMC. But we can take a look at it anyways and see just if it was really far off. Okay, and these are the levels that we got. Basically, look at, these are small, negative gamma, and these bars are by far larger. So I would have concentrated in this region right here, 658 to 654, 640, 664, but these are kind of significant too. And when it's spread out like this, I would include all the way up to 666. So yesterday, 658 to 666. Okay, yesterday, the low was 660 and the high was about 665. Okay, so it gave a good range, obviously not as tight, but like I said, yesterday was super volatile and gamma was all over the place. Okay, so we're not going to get a super precise level off of that, but we did give good guidelines on the limits of where it would trade. Okay, did I know that it would bounce and just go upwards over here? No, it didn't help me with that because exposure was all over the place. So if I wanted to trade it yesterday, it would have to be a range. But like I said, as I noted in my note yesterday, volatility, I personally, I said it was a observing day, not a trading day, right? And then if we look over here, the day before that, am I wrong? Did I look at the wrong day? I did look at the wrong day. Okay. This was yesterday. I'm sorry. So it went down to 655 and as high as 661. Okay. So again, it was a spread across a large number of gamma strikes. So where's 655 is right here. Okay, it's that larger orange bar all the way up to 661. So we didn't even get all the way up to here. So we did right here. So gamma was not wrong. It was just uncertain because it gave a wider range than what it actually traded in. Okay. And then over here, the day before, we're on Tuesday now. I'll not only just go to the beginning of the week. Okay. Just so you guys see how I'm looking and interpreting this data. The other comment I got today was that, hey, why is it moving away from the gamma? It's not going to go straight up to gamma. Okay, it's a market. It doesn't go straight. It doesn't go straight anywhere. So it will go up and down and reject. It will most likely reject from those 2 sigma net levels like we saw in IWM. It went up and rejected the 2 sigma level, came back. And then when that 2 sigma expanded, then it allowed us to go up and hit the gamma pocket inside of that 2 sigma. Okay, so we don't expect things to go straight there. The market still has its rhythm. Okay, here, very split again. And so this indicates most likely choppiness because we were very well split between the downside and the upside. The more important levels are 659, 661, 662, but again, not hugely favoring any of them. Okay, so let's see what happened that day. That day we opened at 660, a little over 661, almost 662, traded down to 659 and ended at 660. So was that not perfect? 659, 661, or 662, and then ended at 660, right in the middle of everything, because everything's so balanced, it just chopped around. So I would say Gamma nailed that one on the head on Tuesday. And then Monday. Was that the first? Yeah, Monday. Okay, 660 clearly the largest. Not overwhelmingly dominant, because if I add 659 and 661 to it, they do look like they'll be a little bit bigger than 660, but 660 clear. And if I were to give it more of a range, 659 to 661. Okay, that's the early morning level. Gap up, go absolutely nowhere. We chop in a range from 659 and a half to 661. And we end at 660.67. So again, is that not bang on? 659 to 661. We end somewhere in between 660 and 661. A little bit of choppy, absolutely go nowhere day that revolved, that centered around the 660 level. So again, at least in my mind and in my interpretation, Gamma was perfectly spot on. So if you aren't reading Gamma the way I'm reading it, and you're one of the people who contacted me and say, oh, the Gamma levels are off, the Gamma levels they didn't help, or then I encourage you to review this video a few times so that you can start seeing it the way that I see it. Because to me, this was perfect. It was absolutely, like, that was tradable information. You could have made a lot of money doing it. Okay. So let's see what you guys are saying. Hopefully you guys are seeing that. Do you see how valuable and how to interpret this Gamma data so that on a 0 DTE basis, how it helps you trade on a 0 DTE basis? Yeah, let's see what you guys are saying. AZO is a normal pullback place to get long. Okay, we could take a look at that. Where do you get SPY Gamma levels you post on the Telegram channel? I get it through my, I have an Excel spreadsheet that does not, by itself won't do anything. It's no good for you. It has a data hookup into my personal servers to grab that. And I'm working with the developers to get a similar screen into the GEX trading terminal. Or I don't know if we'll be able to do it because the GEX trading terminal is already stressed by all of the data crunching that it has to do. So it may end up being a separate application, but we'll see. We'll see. I am working on making that my screens available to you guys, just like it took me a year to make my software available as the GEX trading terminal. This is a separate piece of software that I use specifically for 0 DTE purposes. So I'm working on making it available to people. IWM was a 0 DTE trade. IWM, I was trading it. I expressed the trade on TNA, which does not have 0 DTE expirations, but today's Thursday, so there was a 1 DTE expiration. So that's what I traded it on. But yeah, I closed it out as a day trade, yes. Stephen Boyd says, I'm making good sense. Good. Andrew Kalili, 2 questions. At intraday EMAs 4, 8, and 20, do you ever use these as support and resistance for shorter swings or maybe to find entries? No, I do not use any averages intraday. What you see on my screen is what I use. Okay, that's it. It's the VWAP plus 2 standard deviations. That's it. What I will do actually is I will throw the daily EMA on there also. The daily EMA 8 and the daily EMA 20. I do put that on. So yesterday you can see it tagged the daily EMA 8 and bounced. So I will put those on. Here we were far from them. Sometimes they're useful, sometimes they're not. But obviously they're only useful if we're trading very close to one of those moving averages. Okay, so I will put the daily on it. But most of the time I don't, this is the screen. This is it. What is this line? Oh, I do have the daily on here also. Yeah. So basically VWAP with 2 standard deviations and then the daily EMA 8 and EMA 20. AZO, we'll take a look at AZO. In my opinion, this back can also be very helpful. Can see, good. Okay, great. So let's take a look at AZO. What charting software are you using for showing these examples? I'm using TradingView. This is TradingView. Okay, so let's take a look at AZO. And then we'll also, what else did I promise to look at? Maybe just AZO. If there's something else I promised, please remind me. Yeah, okay. AZO. So we're saying this is a good place for a bounce. That's the question or the opinion. AZO appears to have periodic 400 to 500 point pullbacks, then reversals upwards. Currently it's down 260. AZO, is this a normal pullback and a place to get long? And in my opinion, this is where buyback shares, which is where they have done for years. Well, if we go by normal levels, this is only a somewhat, it is a support, but is not a particularly strong support, okay? Which is why you did see it sort of hold it today, it kind of tested. And of course, we're talking about an area right here, not a specific price. But yeah, it may be paused right here. Obviously, MA50 is going to be a more important level. And that MA50 is coinciding with this area over here, which we did consolidate for longer than we did over here. Basically, what I'm looking for is, were a lot of shares accumulated near this price? And a volume profile will help me with that also. And the answer at this particular price, actually, it's kind of similar to right here, right? So these two would be similar strong support, except this one also has the MA50, which is a very important level, okay? So actually this bottom support is stronger than this support. If we didn't have the MA50 here, then they would be basically the same, similar levels. This one is a little bit stronger, okay, because a lot chop over here, and it also coincides with this and this, okay? So once I include all this data, you can see that this bar is far more significant than this and this, okay? But if we're talking a little bit shorter term, then yeah, these two are important support levels. Okay, so am I going to expect it to bounce from right here? Maybe. I call it a somewhat weak support. Okay, I think that was the words I just used, and that's what I think it is. There is a support there. It's somewhat weak. This is AutoZone is $4,000 stock. That's crazy. Okay. Anyways, it's at 41.35 right now. Okay. Is there a gamma level there? Let's find out. Okay. So 4150 and 4100. Okay. So we are between gamma levels, probably because we're only getting $50 in between strikes. So we're not going to get any institutional, we're not going to get any market maker support from this, from the level right here, okay? 4100, sure, maybe. Okay, so 4100. Okay. So maybe a little bit lower. a little bit lower, maybe a bounce. But I would be a lot more comfortable with a bounce off of the MA50. Okay, so I think AZO does have at least a little bit more to go, down to 4,100, but potentially down to 40.50. Yeah, 40.50, and that's the max pain level for the market maker as well. So they will react to 40.50. Okay. So I like 40.50 better. The 40.50-ish area. We're not going to be super precise here. Okay, this bar, this pink bar right here, and by the time it gets here, maybe the MA50 is up here. Okay, so I like this area of support a lot better than the current area of support. But again, you would just wait to see if it bounces. If it bounces, then fine. But it still has to get through the EMA 20, EMA 8 for you to really become bullish again. And then you've got earnings coming up very soon. So does that happen before earnings? Probably not. Okay, maybe earnings is what causes it to shoot upwards. But now that it's gotten over here, just a few days before earnings, chances are it's probably going to continue on that direction or chop sideways in anticipation, just waiting for the result of the earnings. Okay, and BSX. So far, exiting a trade, does it make sense to wait for a target gamma level so it is proven to take profits that has already gotten to a 1 ATR during the trading day? For instance, in BIS, if it hits the gamma pocket in that day. So your question tells me that you didn't have a trading plan. If you're saying, hey, if during the day it reaches 1 ATR and hits a gamma pocket, should I take profits? That means you didn't have a plan ahead of time before you went into the trade, right? So my answer was going to be, oh, you would just follow your trading plan. So your trading plan should have, when you created your trading plan, you should have been aware of that gamma level already and that 1 ATR level. And then you would have chosen your option and your expiration date specifically knowing that that was in place. And either you cared about it or you didn't. If you cared about it, then you would have just targeted that level. And yeah, of course, you would be out because that was your plan. Is let me take profits right there. If you didn't care about it, you believe that there was a stronger level above it, or you're going for a longer trade and you thought that it could get through that, like a longer, like a maybe several weeks or a couple months trade, that it could get through that level and keep on going higher, then no, you wouldn't take profit because that wasn't part of your trading plan. You're expecting to go through that gamma level. Maybe that gamma level showed up in mid-trade. That's possible. And that is materially different information. So your base assumptions, the whole reason your trade idea now has potentially been violated. So then you have to review your trade idea. So remember the 4 parts of a trade idea, the timing, the execution, and the management. Well, if I go back and say, okay, my trade idea is potentially violated here by this big gamma pocket that suddenly showed up, then I need to reevaluate my trade. Normally, reevaluating my trade means just close the trade. And if you still like the trade, open a new one. Okay? That way you're looking at everything from fresh eyes. You're not saying, well, I did this and that. It's the same argument for, hey, if it hits your stop loss, just close it. No such thing as repairing a trade. You can go into a new trade, just close the old one and go into a new trade. You don't have to sit here and figure out how to fix and modify the old trade. Same thing here, right? You don't have to sit here and try to fix and modify the old trade. Just close it and then put on a new trade, okay? Much easier to do it that way. So you would have had that within your plan to begin with, or if it just showed up in the middle of your trading, then you would just close it and then evaluate from there. Okay. Your trading plan was wait for 100 gamma and then it reached 97A and pull back. Good. Like I said earlier, it's not going to, gamma levels aren't these magic things where it goes straight there. right? Especially the further away that gamma pocket is. It is going to pull back sometimes. It's not going to just go straight line over there unless it's pretty close. So let's see, NBIS, is that the one? And then I'll look at BSX. Your trade idea was not violated. Good, then you're still in the trade. It didn't hit your target. It didn't hit your stop loss. It didn't hit your time stop. So you're still in the trade. Okay. So yeah, here was, I don't know where you entered. Then it hit this 97.5-ish level. Is that 97? 97 level. And then rejected it. It actually went through this 95 gamma level. But if it hasn't hit your stop loss, it hasn't hit your stop loss. Okay, so just wait for it to see if it returns back to your planned 100 level. Unless what you're saying is, my trading plan was that it was going to get there by this Friday. And so you picked a super short expiration. Okay, now you evaluate, well, I thought it was going to go straight up to 100. I picked a super short expiration. Now my probabilities are completely different because it pulled back instead. Okay, and say, oh, well, it might hit 100 next week or the week after, but I picked my options in a way that I didn't have that wiggle room to wait for another week or two. All right, so I thought it was going to hit Friday, and it's got to hit Friday, otherwise the trade doesn't work out for me. Fine. Then that did violate your trade idea, okay, because it didn't go straight to where you want it to go. It did pull back in between, completely changed the timeline and time frame of your trade. And so that is a violation, and you would just close it. Okay. Otherwise, if you're like, hey, my time stop is 3 weeks from now. God, you got plenty of time for it to bounce back up and go back up there, and nothing's been violated, and you just hang on to it. Does that make sense? You see how you work your trading plan? Hopefully that made sense. Okay. So let's take a quick look at BSX. And I also promised someone that I'd explain why there's discrepancies between SPY and SPX, but I'll do it tomorrow. I promise I'll do it tomorrow because we only have about 10 minutes left. BSX broke below the MA200. I would not be interested in trading this bullishly anymore because the most likely thing for it to do is to do this. Okay. But I don't know, BSX has good exposure at the 101 strike price, which is basically the MA200. Okay, so if you wanted to, you could go bullish to the MA200, but that's a counter trend trade. Okay, so you have a lower possibility of a win rate, lower win rate possibility, even though you have that gamma pocket there. It could have, absolutely. The gamma pocket's there, the MA200's there. This is the normal trading pattern. And then, but you better take profits because a very likely scenario is not a break back up above the MA200. It's likely a rejection back downwards. So if you want to take a temporary counter trend trade, then sure, you could do it. But most beginners, we encourage them to only go with the trend. Don't go counter trend. Alex says, I'm watching you. Okay. Sunita says the GX trading terminal suggested next week expiration yesterday, but today it suggested the following week expiration for the same trade. Yes. Why? Because now, if it's yesterday, where's, I'm looking at the wrong thing, MBIS. Because it's taking into account exactly what I said. It was well programmed. Yesterday, from right here, okay, your target is 100. I don't know exactly what time you entered the trade, but I'll just assume that it was the close, I guess, which is basically the same close as today. So whatever the distance from today to 100 in terms of ATRs is going to be the same for one ATR above. What the heck? What just happened? Okay, all right, 100. Okay, so that is basically one ATR away. I think you already told me that, right? It's one ATR away. One ATR, the general expectation is that it can happen in 3 days, 3 or 4 days. Okay, 3 or 4 days, 3 or 4 trading days from where we are right now. 1, 2, 3, and to be a little bit conservative, we'll go 4. That's Tuesday. And so if you want to take advantage of that quick move, then I'm looking for a pretty close expiration. And so generally I'll look for roughly 10 days. Okay, so 10 days from Wednesday, 1, 2, 3, 4, 5, 6, that's going to basically take you to Friday. Okay, now that one more day has passed and we've basically gone nowhere, and I still need to travel one ATR, I want to give myself at least another 10 days. Because remember, the GEX trading terminal doesn't know that you got in yesterday. It's just evaluating it as of today. So say if you get in today, you're targeting about one ATR away. I'm going to suggest a trade that gives you, at least 10 days of time. And 10 days of time from today is no longer next Friday. It's the following Friday. That's why you get a different expiration today than yesterday. It doesn't know that you got into the trade yesterday. Okay, does that make sense? Okay, great questions today. Okay, the other question I did not answer was, have I seen good gamma levels in the metal sector? Okay, so let's take a look at a few metal stocks. And let me look at my watch list. My watch list. Nope, I haven't updated that list in a long time. Post-market watch list, okay. Metals. Okay, so GDX will pull back there. That looks pretty good. So gold and GDX both pulled back to a major volume profile level. If I look at the gold ETF, I will probably see a good gamma level right where we are at the current level, right around 335. XME is looking pretty good. MP, what is that? That is a short-term trend moving up to match the long-term trend. That is looking pretty good. MP, GDX, GLD. All the gold stocks are going to look pretty much the same. AA, Alcoa. Not as good looking or as clean. FCX, mining stock, looking okay. But gold looks so much better, and so does MP. So I would focus on those. So gold, actually, the gamma level's at 340, not at 335. So I was off a little bit. So even better. So the major gamma level is right here. Okay, so it rejected off of it. It bounced off of it. But if it can break through, then we've got it can go higher. We got a little bit of ladder going on over here. Let's take a look at MP. That looked really good. That's the reason I was asking whether I should have exited after it went up 1 ATR, even though it didn't reach the 100 gamma level. Did it move up 1 ATR? I guess you entered earlier then. You entered sooner. Right? If 1 ATR move was that 97.5, then I guess you got entered in earlier in the day and you got in down here. Okay. And my answer is still no. You stick to your trading plan, right? Nothing fundamentally changed. Oh, but you traded next week expiration. If you traded next week expiration, then yeah, because you don't have enough time left now anymore. Well, you do, but 1 ATR move from where you were at that time didn't go all the way up to 100. That was probably 1.5 or 2 ATR. I don't know exactly where you entered. I'm just guessing. Okay. But from where we are now to 100 is a 1 ATR move that does take about, we had expected to be 3 or 4 days. And then that only gives you a couple days left to expiration. So then you're going to be looking at time decay. So if I were in your position, I would just exit on a bounce tomorrow. If it gets back up to 97.5, I would just exit then, since you don't have a lot of time left on your option. And I don't know if you did an in the money option and at the money option. If you're in the money, then it might not matter that much because you could hold all the way to expiration, and if it goes all the way, then if you're out of the money, then you definitely want to close it because that option will quickly go down to zero as you get closer and closer to the 0 DTE. If you chose like a 108 or a 104 or even a 100, that 100 strike would be worth exactly zero if it hits 100 at the day of expiration. So yeah, and obviously you didn't pay zero for it. So if you're in any way out of the money, I would suggest closing it for sure. But if you're in the money, then you can consider holding it to expiration. Okay. Great. Oh, deep in the money. 91. Oh, great. Then you could hold it. You could hold it to expiration and wait and see if it does actually hit 100. And if it hits 100 before next Friday, then yeah, you can. 91. You probably are still in profit then, because today went nowhere. You entered lower than the close of yesterday, so you're probably in at least a tiny bit of profit, and you can afford to, because your risk of going down to zero, like losing 100%, is extremely, extremely low. And you're at a 91 call, your risk of even losing like 30, 40, 50% is very low. And so if you can keep your losses within 30%, it's easily recoverable from an options perspective, right? It's easily recoverable. Okay. Yeah, okay. So great questions. And hopefully you guys are learning a lot about option selection, behavior, the thinking process. And yeah, stick to your plan. Stick to your plan. Okay. All right, what were we looking at? BSX? No, we were looking at MP. Is that the one? That's not the right one. That's the right one. Okay. MP, yeah, you could target 75. Okay, so MP is looking very good. And so what does 75 look like on MP? Yeah. So obviously it made a pretty big move today, but and that's not ideal entry. Ideal entry is on a pullback. This is sort of a breakout. It's more like it started to go parabolic right here. Normally, I don't like to chase parabolic ones, but there's some meat on this bone. The problem is, where do you set your stop loss, right? If you enter right here, That's the main problem. And because it's going to be hard to get anything better than a 1-to-1 reward risk ratio right here. Okay, 'cause that's a 1-to-1. And I guess you could say that maybe over here, there are some levels like this level right here to sort of maybe justify your stop loss, but it's risky. Okay, and that's probably smaller than 1 ATR also. So that is 2.74 below the current price, and your ATR is 3.69. So you could get stopped out on randomness. So too late for MP if you're only going to target 75. If you're going to target higher and say that it's going to go up and break out over here, then sure. Then you would go, I would set my stops right here because of all below the, you could go a little below the MA50. This would be more conservative, in which case you've got to look for something up here. Okay, so 1.5 ATR would be about 90, or 1.6 reward to risk ratio would be about 190, and then 2-to-1 would be about 95, 94, 95. And then if we shrunk this a little bit and said, okay, we'll just go a little bit below that MA50, then you could go down to 88, 89 for 2-to-1. So let's see if any of those are on the radar screen for gamma. 80, 95. Okay. If it goes up there, it can, yeah, it could work out, but you're going to be waiting a while. It's not potentially. If this goes parabolic, then no, but you potentially could be waiting a little while for this, because this could prove as strong resistance, because that was the major gamma level right there. Okay. All right. We're out of time. We're going to end it there. Hopefully you got a lot of value out of this and learned a whole bunch. And tomorrow I will start out with talking about why sometimes the SPX and SPY don't line up. Oh, this one's up 1%. Let's see how it did today, actually. SPY up 0.47%, SPX, oh, they're right on top of each other today, but sometimes they're not, right? And so we'll talk about why. Okay, have a wonderful rest of your days, everyone. Hopefully I'll see you tomorrow. And